The information in this podcast is not intended to be used as the primary basis of investment decisions. Any forward-looking statements are not guarantees of future performance, and actual results may differ, or other factors may change.
Welcome to Making Sense, the podcast for anyone interested in diving into the investing and startup space. Hosted by us, Emma and Carmen.
We are interns at Red Thread Ventures, an investment and advisory firm based in Vancouver. From interviews to startup advice, we will take you on our journey as we learn more about the finance industry.
With that being said, let's get right into today's episode.
Hi, everyone. Welcome back to the podcast. We hope you all have been enjoying all of our guest interviews thus far. I know I sure have, as we've talked to so many different people in various industries and have gathered so many unique insights and stories. For today, we are excited to have another guest here with us today, Xin Zheng, who we know as Prof X, since we are actually former students of his. We took COM 293 and Intro to Financial Accounting class with him this summer while simultaneously completing our internship. During class, Prof X likes to share a lot about investing news and is a long-term investor himself. So today's episode is going to center around the process behind evaluating a company before making an investment. And we are hoping to draw some tips from this conversation ourselves. But before we get started, Prof X, how about you tell our listeners a little bit more about your background and how you got started into investing?
All right. Hello, everyone. Thank you so much for having me. My name is Xin Zheng. I'm currently an accounting professor at UBC Sauder. And I started investing after I took my very first accounting and finance class in college. So when I was 18, which is a long time ago. And those classes really drew my attention to investing. And instantly I became, interested.
Were you at the time starting small then? Like kind of how did you dip your feet in, if you don't mind elaborating a little bit more?
Sure. When I remember, I just used Excel to mimic, all those trading activities I would do before I actually had any capitals invested. I think a year later, after I was very familiar with trading, I put down like $2,000. I saved it up from my summer jobs and started investing, mostly in stocks. Yeah.
I had a little bit of a different approach there. I was just like, oh, I'm going to go right ahead and not look at what's happening and just put some money and see what happens. And it didn't work out so well for me. So I think your strategy might have been a little bit better there.
Yeah, I'm very conservative that way. So,
Yeah.
Yeah.
Well, that's great. So throughout your kind of time at university studying business, I assume, how did that kind of affect after your financial accounting class? How did that affect your investment decisions as well?
Of course. A big part of accounting is to figure out the fundamental value of a firm, which is the basis for any long or short positions in equity investments, let's say. When an investor purchases a stock and takes a long position, for example, they profit by buying the stock at a lower price and selling the stock at a higher price. But the important thing to figure out is what's the right price to buy in and what's the right price to sell. Right? The investor has to form some kind of expectation. And how do they form expectations? That's through mostly some types of valuation models, such as discounted cash flow model or dividend discount model. If we're using any of those models, there are so many components that go into the models to arrive at the final estimated price or expectation of a firm. So most of the model components are related to firm financials, either from the financial statements or other types of disclosure. And my background in accounting really helps me identify those components better. For example, I would pay attention to commonly ignored things like off-balance sheet obligations, potential litigation settlements, which are very complicated things to value. So essentially that gives me a little bit edge in terms of trading and makes me more of a fundamental based investor.
So for people who haven't heard before, fundamental based accounting or investing, that's looking at like companies' financial statements, making sure that there's like traction behind this business, that they're having revenues, consistent revenues before putting in, instead of looking at maybe what the market is doing, instead of looking at Reddit posts and stuff like that as well.
Yes, absolutely.
Okay.
So basically, like fundamental investors would make investment decisions based on firms' fundamental information, which is mostly from firms' financials and disclosures. So then the investors would form an expected value of a firm based on those information and trade accordingly.
Mm-hmm. I'm actually writing a blog post right now on different types of valuation. And I'm just finding that in all the different industries, there's very different ways to value a company. Me and Carmen work most frequently with new issue offerings and companies who maybe don't have as much revenue and traction. Do you ever look at companies like that, or how do you kind of adjust your metrics that you're looking at when you're looking in different industries?
Sure. So I think definitely each industry has its unique components you need to consider when valuing them. And I personally specialize in retails and tech, and I don't usually trade on IPOs as what you are doing. But I have a very systematic way of picking out stocks to trade on. Normally, I would download all the financial information of all publicly traded firms in North America mostly, and then run them through my proprietary algorithm. So the algorithm, well, basically ranks all stocks based on a few dimensions that I personally care the most. For example, the growth versus value stocks, a firm's litigation risk, how likely a firm would go bankrupt, and whether a firm has enough momentum in the past few months or past year, and so on and so forth. So in the end, this algorithm will spell out a score for every single firm. I would rank them and target specific types of firms I want to invest. Perhaps right now I'm more risk averse, then I would go for firms with higher scores indicating better performance, easier to invest in. And then I would actually look into each of those firms and do a more detailed valuation analysis on those stocks with higher potentials, and finally arrive, one or two stocks to invest in.
And so when you're kind of evaluating these companies, we're just curious to know what exactly are the ratios that you find most important. I know in class we have like a bunch of ratios, and luckily we had a little open book cheat sheet for that.
Yeah.
But for you personally, in the real world, when you're coming across these companies, what are the exact ratios that you're looking at?
Right. So as I pointed out in class, and as Emma was saying as well, each industry is quite different, right? And also each investor has very different philosophy. For example, I'm an income statement driven fundamental investor, meaning I pay a lot more attention to income statement and specifically the bottom line. So I always go to the net income first. Then I would look at ratios related to net income, things like return on assets, return on equity, current ratios. So that's what I would most likely to pay attention to. And specifically, that's also related to the industry that I'm interested in as well. So that has been working well for me. But if you're valuing firms in different industries, perhaps those ratios may not apply.
Again, because we are new to investing and we're trying to target a few more like university students who are trying to dive in as well.
Yeah.
Just basic question. I know you went over this in class, but for people who haven't had the pleasure of taking your class, where would you find these financial statements to look at these ratios?
So for all public traded firms, you can go to the SEC.gov. They have the Edgar database. Then you can look into their financial disclosure they filed with the Securities and Exchange Commissions. And also, if you go to any firm's investor relation page, for most publicly traded firms, they have an investor relation page, and they would, publicly disclose all the financials as well.
I'm also just curious to know if you at all dive into private equity, and if you do, because they don't have those public financial statements, how do you go about evaluating it? Or if you don't invest into private equity, how would you go about it?
Yeah, so I personally don't invest in private equity, but I've done some consulting work for some of the firms in the industry, it's actually quite difficult. So it's always better to have multiple years of track record. And the fundamental part of, valuing those financials for the past is how can you ensure its integrity? And that you have to do a lot of due diligence, perhaps with their own private auditor. And also, like, I would personally interview some of the stakeholders and some of the employees there and gather more information about the company.
So I know you mentioned a little bit that you prefer to invest mostly in like retail. Why have you been drawn to this industry?
Sure. So like I primarily invest in two industries, retail and tech. So I think I started with the retail because that's one of the very first industries I ever invested in. And back then it was very easy. And also back then in my mind, the very first company I invested in was Apple. It was a combination of retail and tech, which is perfect, right? And when I started investing, which was in the early 2000s, Apple as a company was evolving, right? So it was great opportunity for me to invest. And I guess in general, I invest in retail because I know the industry, very easy to predict for the most part. And my models work very well. And I also prefer to invest in tech stocks because it's very exciting. And I also know the industry very well. And I have a lot of friends in the industry. I can, always fall back and call them and ask questions. Yeah.
For sure. It definitely shows that your personal knowledge in an industry can definitely serve as an advantage. But are there any up and coming industries like that are very hot right now that have kind of caught your eye?
Yeah, absolutely. So like recently I'm looking at two industries, or maybe like specifically two companies. One is PayPal. I think, COVID really changed a lot of our habits, including how we pay for things, right? So now we're more frequently using touchless payment, and I understand that PayPal has been investing more in like different ways of payments, and it's been expanding its global market. And also they have been investing in the blockchain technology, which I think it will be widely used in the future. So personally, I think there's a huge upside for PayPal. So I have been investing in PayPal since the beginning of the pandemic and think it has been working out quite well. And I think PayPal will continue to do well in the next maybe 5 to 10 years. Also lately, I've been watching some space traveling stocks. I think that entire industry is very exciting. Firms like Virgin Galactic, even though like the stock price has been very bumpy for Virgin Galactic in the past month, especially, I just overall have a lot of faith in this industry. I remember when I was a kid, I dreamed about space traveling. It's just so exciting to see how some companies and some people are making this, dream come true for so many of us.
Yeah, that's really interesting space. I think that's a new one. We haven't heard that one before, definitely not on the podcast. But
Yeah.
As a professor, you work with a lot of aspiring business professionals and you teach them. You're talking to your students right now. But have you noticed any significant barriers to entry that your students face when it comes to investing? Because I know for Emma and I, like it was kind of a daunting subject. We had to do a lot of research. So do you have any advice for overcoming those barriers?
Yes, absolutely. I noticed that like a lot of people have the desire to invest, but they don't know where to start. And specifically, they don't know how to form the correct expectations of when to buy and when to sell. Those are the basics, fundamentals of trading and investing, right? Especially nowadays with the advancement in technology and free-flowing information from all directions, newer investors sometimes enter the market with expectation that they can get rich very quickly in one transaction, or they just don't know what to expect from the stock market. They only want to make money, but they don't know there's actually a lot of things that go into investment decision. So my suggestion is that do the homework, get to know the market, learn the very basics and fundamentals of investments, and form the correct expectations before you investing any capital at all.
Yeah, when I was first starting out, two of the first companies that I invested in, Aritzia and Asana. And I got very lucky. I picked the right time for both of those because with people going back to like in-person school, work, all of that, Aritzia, people were buying more work clothing. So that one went up like conveniently right before, right after I put my money in. And same with Asana. That's a online work platform where people like people who are working from home are able to connect and share tasks and make sure everyone is on the same page. So I kind of fell into those because I was familiar with those businesses. And when we first started working here, we were on Asana and I was like, I like this platform, this is cool. And then I saw it on Wealth Simple. I was like, okay, I'll put some money in here without really looking into the fundamentals, and I got lucky. But then in other places I wasn't so lucky because I didn't really do my thorough homework. But yeah, it happens that way. And I guess until you learn more about the market, you're going to have those things. You get lucky sometimes and you don't other times, right?
Yeah. So one way to avoid that is to when you encounter some newer industry, newer company, yeah, some of them are offering great products, right? That would attract your attention. Then you should actually, I would suggest people to go in, take a look at their financials and see, do they still have upward trending momentum in the future. So it's great that you got inspired on your daily life, as we all should. But perhaps in the future, if you consider more of, the financial information, it can suit you even better.
Oh, definitely.
Yeah.
And I think that's something that like the market has seen as a whole a lot recently. People kind of overlooking the fundamentals and the financials behind these businesses. Like we've seen GameStop, well, a lot of people who are on Reddit just kind of waiting for posts to go out and for people to tell them what to invest in, and then everyone jumping on the trend without maybe doing any of their research on their own. It seems that your strategy definitely contradicts what we're seeing on that side of the market right now. Do you think that more people are shifting away from the fundamentals based investing?
So I've been doing a lot of media interviews regarding this particular issue, specifically on GameStop. I think it's very exciting to trade on momentum because you're moving with the market. You're witnessing the history, a part of the history, right? However, that's most investors, especially for investors with less investing experience, they should completely avoid that. That's one thing you should not do, because trading on momentum makes it much harder for one to buy or sell because there's no benchmark. There's no expected value of a firm. So as I mentioned earlier, for fundamental traders, we would form expectations based on our model. So in our mind, we know, okay, our target price, let's say, is $50. If any price below 50, we are, we should invest, but anything above 50, we can possibly sell. So there's a very clearly defined, benchmark. Of course, there are other variables to consider as well. But for momentum traders, like, it's relatively harder to measure or even come up with a benchmark. You don't know how high the stock price may go, and you don't know when is a good timing to trade on a company. So that's one of the problems. So I understand it's human psychology and the innate nature of any human being to chase momentum. But there are a lot of academic papers showing that momentum traders in general are worse off in terms of trading compared to fundamental traders. So even though like you see a lot of retail traders maybe doing this types of trade, especially in the past year or two, given the advancement in technology and information channels, but I personally don't think it's a sustainable way of trading. So if one wants to make sustainable money in the long run, I still think fundamental trades are where to go.
Mm-hmm. I will say I was a bit of a victim to the Reddit hype. there's a company, Corsair Gaming, which about like a month ago shot up 30% in one day. And I thought that it was going to get higher. And then you just keep thinking that. And then ended up losing only $8, but I did learn a lot that day. So although I definitely agree it's not sustainable, you do learn a lot from your mistakes there.
Yeah, absolutely. So to be honest, like as a trader, when I was starting to trade, I definitely chased momentum before, and I was trying out different strategy. I think it's also investor specific thing. Some investors do much better with fundamental trades, whereas others have the edge of over like human psychology, and they do great with momentum trading. It's worthwhile to try different trading strategy, given that you can bear the maximum loss. And after a while, you're going to figure out what types of trade you're most comfortable with, and you should continue with that.
So what would be your top 3 do's when it comes to starting out investing and putting your money into some companies? Like, what are you looking for? What are your 3 biggest tips to give to maybe people in our shoes?
So usually I say 1 book, 1 newspaper, and practice. So definitely, if you, assuming you know nothing about investing at all, pick any book. Like there are many really good books, talking about investing, like the basic concepts of investing, what you should invest on, what your portfolios should look like. So pick a book. I'm going to recommend Investing for Dummies by Eric Tyson. It's a classic one. It does a good job providing an overview of all types of investments and tells you, ideal portfolio should looks like that. And then you should stay current with all the news and stuff. So I would suggest you to read 1 newspaper. Doesn't have to be the actual paper. It could be like, online outlet as well. And you should practice, right? So many banks and online trading platforms nowadays offer free practice accounts that you can use. Get familiar with, like trading using those free accounts before you actually invest any money. Or if you think, it's too hard to set up those accounts, you can just open your Excel sheet and keep a record of every single trade that you hypothetically trade. It's that simple. So in the end, 1 book, 1 newspaper, and practice.
For sure. I think that practice piece is so important. I know Emma and I, we had the app Best Brokers, which is like the free app where you don't use any money, but you just like kind of see, and it kind of is a simulation.
Yeah.
But I definitely think that until we put a bit of money into Wealth Simple, that was when we learned like the most. So that practice piece is so important. On the opposite end, what are some of the biggest red flags you have when investing into a company? Like you were mentioning before, a lot of beginner investors don't know when to pull out and when to withdraw. So what are some red flags there?
So the red flags, I would say, like, so first is like investors would enter the market without even knowing the market at all, right? You would be investing in a completely different industry than what you're familiar with, and you don't do the homework. So that's a biggest red flag to me, because if you're only listening to other people's information without processing those information, you don't know the integrity of those information, right? Perhaps sometimes an investor could get very lucky and profit on 1 trade, but can the investor profit in every single trade or most of the trades? It's kind of difficult, right? And second is that the investor doesn't know what's the maximum amount of loss they can bear. So many of them enter the market with expectation to make money, as we all do. But I think more realistically, the very first expectation anyone should set for themselves is what's the maximum amount of money you're willing to lose. If that's set in place, it will make the trading a bit smoother. So make the psychology a bit easier to deal with. Yeah.
On that note, we actually have had a few previous podcasts where people were giving us advice, and we've had 2 reoccurring contradicting pieces of advice. Right at the beginning, we were told when you're starting to invest in stuff that you're interested in, stuff that you're comfortable in. And then later on with a different guest, he said, don't do that at all. Learn about different industries, diversify your portfolio, invest in stuff that you're not comfortable in so you can learn more about it. Do you have a take on that?
Yeah, so I think people have different experience so that they have very different views on those type of things. And also it depends on how seriously an investor is taking their investment activities. So for example, I'm currently just, investing like in my free time. I'm not doing it as my main job. So my way of trading would be very different from a day trader whose income is solely on trading, right? So the view would be very different. And also, I think initially for any investors is to begin investing, it's definitely easier to pick stocks or firms that's in an industry that's most familiar to you. So that you'll be more intrigued to look into the financials, because we've seen many financials that they are kind of hard to read at times, right? So for you to continue to read into the financials and do analysis on them, you need some types of, motivation. The motivation is that you're interested in this company and you want to make money. That's basically it. So I would suggest people to begin with industry that they're most familiar with and pick companies that interest them and they're familiar with, rather than learning about every single industry. Because right now there are so many industries. And also, and on a side note, how to classify industry is a big problem. So for example, Amazon and Apple, what kind of industry are you going to put them in? Are they retail? Are they tech? And I think Apple and Amazon also make movies. Are they in the movie industry? Like, yeah.
They're just giant.
Exactly. They're conglomerate. So it's almost difficult to learn those companies.
So beyond looking at industries, I'm just curious to know how much of your portfolios consists of like individual stocks versus like ETFs and index funds, and what is kind of your opinion on how much should be dedicated towards individual and then the latter?
Yes, so that depends on the risk-taking, tolerance of any investor. So I'm more risk-seeking. So right now I'm doing like 60-70% of equity or like active stock trading in my portfolio. Especially in the past year, I expanded that ratio because the entire market has been doing great. So overall, my portfolio has been doing well. In normal years, I would do just 50% stock investment, and the remaining 50% would be divided into like fixed income, ETFs, all those things. I don't invest in debts at all. Yeah, it really depends on how much risk the investor is willing to take.
Speaking of risk, have you ever had a time where one of your stocks didn't perform so well? Do you think you could tell us about a story there?
I think it happened quite a few times, but I'm not sure if it's because of risk related or it's because of, the overall macro environment. So I began to trade right around the biggest mortgage crisis in 2007, 2008. And back then I didn't know the market very well, right? So I lost quite a bit of money. That's partially related to risk and partially because of my ignorance. And I primarily invested in the tech companies back then, as well as some of the banks. The banks took a big hit. So I remember in one day I lost like 50% of my portfolio. So yeah, definitely do your homework before you invest.
Is that your biggest takeaway then? Do your homework from that experience, or do you have any advice that you've learned as well from that experience?
I definitely say like do the homework is the biggest one, because it's also very important to hear other people's perspective. Back then, I didn't have a lot of friends who specialize in trading, but now I do. So I do go to them, ask them their opinions, because each investor form their own perception and expectation of a stock or industry of the market. And when you aggregate all those investors' expectation, we have a higher order expectation model that we can consider, and that's very important as well. Yeah, I would say, definitely do your homework and also listen to other people's advice. But in the end, you need to be able to make a swift decision given all those information.
Mm-hmm. What's kind of your mindset when you're kind of bouncing back from these failures? Like when I lost $8 in Corsair, I was like, I'm never investing again. I'm done with investing. Then I'm like, okay, that's kind of a stupid mindset. So how do you kind of bounce back from your failures?
I really think failing is part of a normal process on the road to success. So like overall, we need to form a holistic view of trading, meaning trading is a long-term thing. It's not defined by any specific transaction. It's not defined by, one-time investment, right? So investors should know we should pay more attention to the net gain or net loss of all your trades in a long term. So like losing, one trade to me doesn't really mean much, especially after a while. I totally understand when you initially started to trade, that means quite a bit, right? So, oh my God, I didn't do well in this one particular trade. But you should move on quickly because it didn't hit as long as it didn't hit your bottom line, the maximum amount of loss you're willing to bear. And you just learn from that lesson and move on.
Resilience, patience is key.
Yeah, definitely.
So I think we're all curious to know. So you definitely had shared your success story with Lululemon. So what is one company on your watch list right now? So right now, what do you think is going to be your next Lululemon?
I think it's going to be PayPal. I invested quite a bit recently in PayPal. And I started investing in PayPal like last year. So I think already like 20% gain already in a year, which is pretty good. But also like the market has been great. Yeah.
So for people who are listening, assuming they do their own due diligence as well, do you think it's too late to jump on that PayPal bandwagon, or is that something that you're still continuing to put more and more money into?
Okay, so it's kind of hard to say, right? Like I don't want to give the wrong advice. So like no legal ability, like liabilities for me.
No, we got a disclaimer in here. Don't worry.
Right. But I think from my read of the disclosure, I think there's potentially more upside for PayPal in the next 5 years.
So we have one final question for you today.
Yeah.
I know we've mentioned a few books already. Do you have any other resources that you would recommend to a beginner investor?
So for me, I think like once you know the basics of investments, and I think you can just, start practicing. Don't get too hung up in any books. That's one advice I want to give to the audience. Because right now there are a lot of books, really good books out there, and some of them are talking about very different mindset. You just pick one and get going. Otherwise, if you get too caught up in certain trading philosophy, it may not suit you very well. Because trading is not only just one component, right? Like even though I'm saying I'm a fundamental trader, but that means I'm primarily a fundamental trader, but I still have to make decisions with the consideration of human psychology, overall market and macro environment, things like that.
That's some great advice there. So I actually have one final question for you. I know that a lot of listeners for this episode specifically are probably Sauder students and our classmates. So do you think you can share your skincare routine?
Thank you so much. I'm gonna make a YouTube video just about that. How's that? Yeah.
Awesome. Well, that concludes our questions for today. Is there anything, last things on your end that you'd like to mention before we finish off this episode?
I think it's great that you guys are doing this and, raising awareness of trading, because I think for anyone, it's very important to start managing or even just thinking about their finances early on. So for anyone who get exposed to this episode, it's never too late to start investing or start thinking about investing, you know, do your homework, give it a try, and I wish you the best luck.
Awesome. Well, thank you so much for joining us today. It was really nice to catch up after Com 293. Feels like so long ago now.
I know.
But
Thank
yeah,
you
we
so
really,
very much for having me. It's been great fun.
yeah, no problem. We really appreciate you sitting down like this. I feel like you've had so many great stories that we just didn't have the time to talk about during our class, but I'm glad that other people are going to be able to hear them as well. And also for anyone else who is listening, I would highly recommend checking out your Instagram account to learn more about financial accounting. The videos are above and beyond on there. I have to say, the Bill Nye one was a personal favorite.
Oh, thank you. Yeah, I'm also, venturing out in my social media outlet. I will be starting my YouTube very soon. And I made a campus tour video for you guys because now we're coming back to real person learning on campus in September. A lot of you guys have never been on UBC's campus. So I will take you guys on a virtual tour on YouTube and showcasing the most beautiful parts of UBC. Hopefully you guys like it. And my handle is going to be at Dr. Xin Zheng, DrXinZheng. Yeah, thank you.
Awesome. I'm looking forward to that. Although I'm from Vancouver, I've not been really around the campus just for fun. So yeah, that'll be fun. Well, thanks again and best of luck next year at UBC in person. We hope to see you around.